What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is September 1st of 2023. Well, folks, I hope you are having a fantastic day wherever you are, because in today's video, we've got to talk about the massive dump we saw over the past 24 hours as Bitcoin reversed all gains from the speculation around a guaranteed ETF around the recent victory against the SEC in regards to the Grayscale case. We need to spend some time to break down a couple things. What this fade down in price means for Bitcoin. We need to dive into the macro perspective of what's going on and really try to get down towards asking a fundamental question. Is there any room to really still say we are in somehow a bull market at this point? We've got a lot of things to dive into in today's video, so if you guys happen to enjoy it, consider dropping a like, and let's go ahead and kick off the rambling. All right, guys, I gotta say one thing here. I'm not here to say that we got it right here. Again, I don't care about day-to-day moves here so much. But I want you guys to really sit here, and I want to try to reach across the aisle for those of you who may come to this channel for a devil's advocate perspective. I'm totally up for that. I don't want all of you guys just continuously 100% agreeing with me, but we got to spend some time here to ask a fundamental question. Off of the news that came out the other day, not only does the price action scream that this doesn't mean it's a guarantee of an ETF, exactly like we talked about in the prior video on Wednesday, as we've faded down any price gains since then. But outside of this, well, we've got to come back to a much bigger question. Are we really in a bull market? Because when you have news like this, even something that might put us one step closer to this big catalyst that everyone's betting on, which is another financial entity out there in the world being able to package and create a Bitcoin ETF under the guise and approval of the SEC. That's the only narrative that's got people excited about Bitcoin right now. More people are going to buy our bags. Let's just call it for what it is, right? That's the narrative that bulls have gone off of. Some will say the halving, which we've already kind of dispelled here. You can watch our video on why the halving event doesn't have enough of an effect to cause a new bull market now. Most likely, more likely than not. But let's just go ahead and just take a look at the price here, guys. And I want you to think, again, back just a couple months ago in June, when we had pretty much no news events here, right? We had the BlackRock speculation at the time, nothing more than BlackRock stepping in and creating these ETF applications. Doesn't mean they're guaranteed of anything. But remember the price action then from 25K to upwards of nearly 32K? Yesterday's news was sold as if it was a guarantee. I heard some people saying, I don't know, I didn't hear it was a guarantee. You looked over crypto Twitter, you look over crypto YouTube. If you're not turning a blind eye to it, there were a lot of people who told you that this was a slam dunk. We were one of the only channels here, guys. And I don't want to say that I'm a monolith of opinion you should listen to, but by God, we got this one right. And we've been getting it right every single time on calling out these bullshit narratives. And if you fall for these, if you keep listening to the people who are selling you that kind of hope, you're going to get caught buying in to 7 or 8% pumps, right? These time repeated moves in Bitcoin that have no real substance to them and will eventually fade and take your money from you. This is really, it's getting to a point where it's irritating for me, guys. I don't mean to be negative, or I don't want to be negative. I'm here to be realistic with you guys. And I've seen so many good people who I really admire and respect, get burnt here because they keep chasing these stupid narratives, guys. There is no substance. You've got to look beyond the headlines on these things. And if you don't, you will get suckered into these rallies. I'm only telling you that because I'm not here to promote you my Bybit referral link. I'm here to tell you that you need to preserve and protect your capital in a macro environment that has completely changed the way that Bitcoin is performing. Bitcoin grew up over the last decade in an era of easy money. We no longer have that easy money. And Bitcoin is no longer this micro cap asset. It is a $500 billion asset. And we've got to really ask ourselves here, looking at the price action, is there more supply or demand? When it comes to market, buy or sell side pressure, are there more people looking to market buy at the best available price, FOMOing in, or are there more people taking advantage of the higher prices and selling at the best available price for anyone who's willing to bid out there in the market? Essentially sell side pressure or supply. There is more supply. By and large, guys, we have analyzed the cumulative volume delta consecutively here on the channel and also in my trading journey. And outside of that, the price action just shows it to you. Even after yesterday's news, we could still not get above the 200-week moving average. Or the 200-day moving average for that matter. And some people still are saying that this is a bull market? Seriously? I'm sorry to be a bit heated, guys. Look, we get things wrong on this channel. I don't want to promote as that. We've made wrong calls in the past, but it's It's been for a year now on this channel that we have been direct with you guys about admitting to realizing, wow, okay, the macro environment's changing, liquidity is contracting. Once that became obvious that the Fed was going to pull back and start really contracting the balance sheet, we didn't question it for 1 second. The Fed is in the driver's seat dealing with inflation. And I'd say the only criticism I have is that the Fed hasn't done it fast enough. That's the biggest problem. But generally speaking here, guys, if Bitcoin can't hold above the 200 week, we spoke about that for a long time here. It was nice that we got this bounce here. But again, if we can't clear through this resistance range, right, which was prior support, but is now acting as steady resistance since back in April, and we can't hold above the 200 week, where do you think we're going? I mean, certainly not to new all-time highs. Not yet. Not until we get some more consolidation. Not until we find a bigger bid that's ready to drive up and absorb any remaining supply and liquidity on the market. That is how bull markets happen, guys. It's not the halving event anymore. The halving event is barely going to reduce the inflation rate for Bitcoin from this point on. It is much more a question of whether or not there are more eager sellers or buyers. And we're one of the few channels that has been focused on this question. This looks like it's about to snap, guys. And for those of you who are wondering whether or not I'm looking to short, yeah, I'm getting ready to short here. I'm looking, if anything, this has been the time where I feel quite confident because our indicator has flipped red. The moving averages here are barely just hanging by a thread here when it comes to price. If we take a look at total market cap, we have still gained around $250 billion from the low range here in the entire cryptocurrency market cap. There's a lot of fraud and unnecessary valuation out there. Altcoins set in a fourth lower high here since back in May. Right, just within this period of time here. And it looks like we're ready to roll over, like we talked about, back into this range around $150 billion. So another roughly $60 billion haircut for altcoins. More than another 25% correction from here on out, even after all the bloodshed that we've seen in altcoins. And again, if you don't believe me, just take a look at some of the charts here, guys, for some of these plays. ETH USD, right? Had two failed breakouts at $2,000. Actually, the third failed breakout here. And ever since then, right, we got a little bounce here the other day off of some ETH futures news coming out, and essentially we just rolled that back over. This is an ascending triangle. If we don't get some buyers here soon and we snap below there, that will be a year-long bullish pattern, mind you, a bullish pattern where the bulls did not show up. This was the prime opportunity. You had all of the optimism, the kind of blind narratives of, oh, ETH2, EIP 1559, we got to go long, and buy just because the supply is going to be reduced. But people focus too much on the monetary policy aspect of crypto, and they didn't ask the fundamental question, which is much bigger: are there more eager buyers or sellers? Do you see your friends and family being like, oh yeah, I'm DCAing into crypto, I'm going all in? Or do you really see them being more hesitant and dealing with the cost of inflation and worrying about their job and worrying about their mortgage and worrying about their rent and worrying about the cost of living? Because I know a lot more people in the latter camp, not looking to buy ETH here. And not to mention, where are the applications for Ethereum now? I really bash on Ethereum here because it is the second largest cryptocurrency. I've invested tons of time and money into the ETH ecosystem. And DeFi is dead. I got to be honest with you guys, it's not me being negative here. We got to wake up and be realistic. When you're parking your money in something, you should feel confident knowing, yeah, there are these trends going on. These are the narratives. There is a certain probability that this could really pay off in the future. I can't name you guys one application in Ethereum that really excites me right now, that I feel I have to use on a day-to-day basis. Last ones were Uniswap and maybe Compound and Aave. Those came out years ago now. Where are the new applications? Where's the new development? It's non-existent. BNB here, right? We're going to go down the list of some of these big altcoins here. BNB, right? Just teetering right along more than 5-year long support line. Almost coming up on 6 years here. This is the second largest altcoin or third largest cryptocurrency, right about to snap here through not only this 6-year long trend line, but a long-term line of support since February 2021. That's a trend line that's been on for 2.5 years, both of which are likely about to be snapped and likely move lower into what is pretty much no man's land. I mean, maybe you catch a bid here, somewhere around $128 or something, or maybe $140, $150. However you draw the trend line, that's pretty much another 40-45% correction for BNB, the largest crypto, the largest altcoin outside of ETH. this looks really bad, guys. I'm not just trying to be cynical here. Feel free to draw trend lines. Correct me if I'm wrong here. I don't know where else you could draw trend lines here. These are the best ones I can find. I'm looking at the long-term timeframes. XRP, which supposedly won its court case, again, we were one of the few channels out there who said that it wasn't a slam dunk guarantee and that there were important nuances to understand by the case and that it can be overturned easily and it's not precedent. Look at the price action here. You don't need me to tell you that. XRP showcased it. XRP, or Ripple Labs, and I'm going to say it for what it is, every single time gets these pumps and they drive it up as much as they can with their market makers, and then they unload, they distribute. You don't need me to tell you that. That's why they went to the court with the SEC. They offload hundreds of millions of dollars of XRP into unknowing retail investors off of some false narrative that they're going to become the absolute global ledger system that everyone has to use. I'll say it loud and proud here. And to be honest with you guys, I'm really tired of seeing people promoting this and not taking any degree of responsibility when this has been known for years in crypto. And it can barely even hold here on the 200-week or 200-day moving average. This is, again, the largest cryptocurrency here. I apologize. It's on par with BNB, roughly speaking. But generally speaking, XRP can't even hold here at the 200-day or 200-week. Where do we go after that? Where does price lead? Take a look at DOGE here, right? DOGE, which is a great indicator of risk-taking, as it's one of the largest meme coins in the crypto market, right? No matter, let's really, again, take fundamentals out of the question here. Like, people say, oh, we're going to get speculation. People are going to repeat history. Really? Let's take a look at DOGE here. DOGE has set in lower highs ever since back here in May of 2021. Every single time we get a pump, lower high, lower high, lower high, lower high, lower high. And we are just barely holding by a thread here around this 5 to 6 cents range. If we don't get buyers in there, we're coming probably back down to 2 cents. Giving up 2/3 of its valuation from that point on. Not looking good. Cardano here. Again, same story here. Trying to find support at a similar range to January 2021. Here we got a nice solid bounce, continued the rally. 25 cents has been a psychological range, quarter per ADA token. People are looking to buy at. If that snaps, we're likely coming down to 15 cents, 10 cents. I don't know exactly what it's going to be, guys. But this is why just DCAing doesn't work when you have contracting liquidity, when the game has changed. And I want to bring it back to center here, guys. It's not about crypto. It's not me just bashing on the fundamentals here, which, mind you, I'll be honest with you guys. If you come here for my opinion, the fundamentals are weak here, man, guys. Declining liquidity in the crypto space, lackluster development in applications, no exciting narratives that I'm really juiced up about right now, outside of, oh, BlackRock has an ETF that they're filing and stuff, or they're going to try to file, which all the ETFs just got delayed. Shows you the SEC can do whatever it wants here in the near term. It's also a matter here of the macro perspective. Equities are extremely overbought and starting to show signs of weakness, and global liquidity is starting to contract and look like it may very well break down to new lows here in the near term. Lows that we haven't seen, or levels we haven't seen since August of 2020 and beyond. And we've said that, again, once you break through here, again, same principle here as we talked about with price action earlier. If we break below this range, we're entering into no man's land. Where does liquidity go to, right? And if liquidity is going to contract another 1, 2, 3, maybe $4 trillion from this point in order for the Fed and other central banks to tame inflation and bring equilibrium to supply and demand, what's that going to mean for the repricing of equities? And more specifically, what is it going to mean for the repricing of cryptocurrencies like Bitcoin, Ethereum, XRP, Cardano, Dogecoin, you name it? No one is safe in this environment, guys. It's not me trying to poke holes at communities and attack your investment bags and your portfolio. It's me being a friend here and trying to point out the reality, which unfortunately a lot of people are not telling you. They're selling you a false hope that things are just going to return back to normal, that you can use the same bull market, kind of initial buy-side indicators to go long, right? Just endless hopes and narratives. We're here sticking to the fundamentals because we know that liquidity is what drives direction. And liquidity is not growing. It's not really remaining flat. It's declining over the past year and a half. Almost coming up on 2 years now. And if we aren't adjusting our trading strategy to that, we are going to get cooked. However, if we do the right thing, and we approach it in a smart way, we can come out on top. Now, I want to let you guys know, we're going to continue the analysis here, but I want to let you guys know, we've been covering this kind of stuff, not just here on the channel for a long time, but also on the Dash Report. It's our newsletter here on the channel, and I know there are a lot of people out there who will tell you, you got to use all these different resources and materials to win out of markets, and they've got some guaranteed foolproof way to make returns. I'm going to be honest with you guys, I don't have any guaranteed foolproof indicator thing that's going to make you absolutely serious amounts of money. What I do have for you is an honest, genuine report on the 4 markets we analyze: crypto, equities, commodities, and Forex. And along with that as well, we have mid-month webinars where you can ask me questions. We dive into the charts. You guys will get our momentum indicator, the red blue line indicator that we feature here on the channel, actually a premium version of it with a pivot tool that is essentially going to help you to know when the trend will flip. Outside of that as well, we've got the Dash Report discussion group. You've got my trade alerts group. You get all these things within the Dash Report, and it's just $240 for a year. That's the annual package. It's 20% off. You can do it for $25 per month as well if you want. But again, however you guys feel about it, it would be a great way to not only support the channel, but it gives you that additional, I would say 25, 33% of content beyond what we do here on the channel that's going to let you guys know when we go short. And outside of that as well, while we're bashing crypto here a bit, there's a big reason for it. Again, it's the fundamentals are lacking right now. We've covered this space since 2016, 2017. I love crypto, but at the end of the day, it's in a weak spot now. There are other sectors out there, and not just AI, but a whole range of other sectors that are going to be doing probably really good over the next couple of years. They're the next market leaders in our mind, and we're continuing to watch those plays and start to build positions over the next few months. And we'll send those out in the trailer group once we start building them. So if you guys want to be a part of that, and you want to have your eyes outside of just the crypto space, that's a great way to start finding some of that information. But I digress here. I want to get back to this topic here, guys. The main thing here is that not only is global liquidity contracting, but we can see here clearly with the central bank balance sheet for the United States or the Federal Reserve, basically over the last 2 months, we've reduced the balance sheet by $100 billion, both in July and August. And that is at an accelerated rate here. Right. Generally speaking, back in June, we kind of started to slow down, but we basically got back on pace to where the Fed was essentially with QT. It's around $120 billion per month on average that the Fed is reducing in liquidity. And that's just the Federal Reserve. That's not including the ECB, the Bank of England, the Bank of Japan. All these central banks are putting a global weight on equities. And the macro environment is not looking so exciting unless you're really just juiced up and sold on the AI narrative, which is collapsing under its own weight in many ways. What is there to really drive a new bull market? Last time around, we had the iPhone. We had obviously software and applications that could be built on top of it. We had Web 2. You started to see really amazing websites, social networks, all types of different really interesting things, YouTube and content platforms, and therefore a whole new avenue of advertising and technology adoption. I mean, just tons of narratives back over the last decade. What do we have now? I don't want to bash the big FANG stocks. You guys already probably heard me talk about that, the lack of innovation in these companies right now, and people still valuating them as if they are these high growth tech stocks at 30 PE multiples, 30, 40, 50 PE multiples for some of these stocks. It doesn't make sense. Well, the big thing here at the end of the day, guys, just focus here and take a look at what's going on with the yield curve. The yield curve is finally starting to uninvert here, and this is going to spell bad news for the overall equity markets. It's going to spell bad news for crypto and assets as a whole. If this starts to uninvert here, we are in for some serious pain and likely on the verge of a recession in the next few months. That's the realistic take. You're looking for an indicator that is time tested. It's been around way before crypto, but is going to hold a lot of relevancy for crypto. Take a look at the yield curve inversion. This is the most inverted it's been since before the 1980s, actually probably in history. So we've got a huge discrepancy here. And this is why markets have essentially been in what we've talked about for a long time, a catch-22. Right? The Fed is either going to continue tightening, which is going to be terrible. If we continue to get higher interest rates here, it's going to weigh down equities, and it's going to weigh down crypto, and vice versa. If we get a yield curve inversion, the Fed pivots, that's also not good. That means something's broken in the economy, that we're likely going for a recession, and that GDP is going to dive, quarterly earnings will be revised, PE multiple or valuations of those companies are going to decline, and that's going to weigh down crypto as well. Don't think for a moment that it's separate, guys. We cannot say for the last decade that we could buy every dip on Bitcoin, on stocks, on any assets because we knew the Fed was going to come in and save us some more money, but then ignore it on the way down when they're contracting liquidity, doing the counter opposite. which kills assets in the near term. This is what you guys need to keep in mind here. That's why we've been talking about building a cash position for a long time. If anything, shorting optimism when you get the confirmation signs for a profitable trade and making some additional money and waiting for the real capitulation where we can really get in at those juicy discounts. Again, guys, if you guys want to get this kind of analysis here, we're trying to kind of work on lowering the amount of advertising content here in the channel here, guys. We're still getting a good amount coming through here, even though the market's been kind of iffy and stuff. But I want to make sure we maintain good advertisers when we do it. And outside of that as well, I'd really love long term to really be focused on the Dash report. And again, giving you guys that channel and stuff where for less than a cup of coffee a day, much less actually, especially if you're a Starbucks connoisseur, if you're drinking Starbucks coffee, it's much less than that per day. So it's a great way you guys can support me in what I do here. We produce 3 videos every week, but we've got already like hundreds of members here in the Dash report. It's a great community. And the more people we can get in there, kind of planning things out, looking at other markets and opportunities, you can start to find a lot of things that you just wouldn't find if you're kind of siloed into focusing on the crypto space. This month, we also, again, we wrote an article focusing in on the 3 market-leading sectors we think are going to really take off in the next few years. We mentioned some names and some companies that we're watching. So if you guys are interested in all that package, again, all in that offering within the Dash report. So that's it for today's video, guys. I rambled on a good amount here. Thank you for giving me some time out of your day, and I'll see you all in the next video on Monday. Take care, everyone. Stay safe, trade smart, and we'll get through this, guys. Crypto will come out on the other end. I'll talk to y'all soon.